Welcome back, traders. This is Sandra with Trading Made Simple, and today we're going to talk about what do you do when you have your trade trigger, and what do I mean by that? Well, we're all following someone on Twitter, Reddit, I don't know, TikTok maybe. I don't think I've even got on there yet, but you know, um, we we all got some sort of big data flow information. So what do you do with that information when you get it? You get a trigger, you're getting your alert. Do you just jump right in? Because I get a lot of people who ask me about, like, what's the deal? Every time I get a trigger, I get in and then it just reverses. Well, that's because a lot of those triggers are actually at resistance or at support levels. So that is the trigger point. But you know how the market, they want to cause as much pain as possible. So if it is a trigger right at resistance, it will just like this, right? It will punch through resistance, punch it through. If you programmed your entry on this little guy right here, punches it through, gets you in, and then what's it do? Goes the opposite direction. So what I always say is, regardless of where you're getting your information, whether it's, it doesn't matter where you're getting your information. If I'm tweeting something out, like, I'm always trying to recommend to people that when you get a trigger, you need to be able to watch the trigger to see, because the VIX is over 20, we need to be able to identify, like, is it going to break through resistance and then come and do a retrace? Because if it comes in, it breaks resistance, and then it comes and does a retrace and then starts to go back up, that's a good high probability trade for a call. But if it breaks resistance and it falls back down, right, then it's breaking support. So here's your support right here, by the way. It breaks it, it pops back up a little, so it and then it follows through. So not everything, of course, nothing goes up in a straight line, nothing goes down in a straight line. But the better the better that you understand that these triggers are very helpful, especially to a brand new trader. And if you can utilize that information with some basic chart analysis, and I'm not talking like a really expensive indicator that you got somewhere. I'm just talking about, like, I think I have the 20 and 50 EMAs up here, right? So if this was my trigger, it breaks it. I need to watch it for a couple minutes to see if it follows through or not. It doesn't and starts to break down. That could help you in your trading immensely. So please recognize that. And so if you're a person that's actually at work and you're programming your trades, because I often program my trades, if you're programming your trades, then what I do is I will, add money to the trade. So, excuse me, in this example, this is, Apple. So it's not a super expensive stock, okay? So as an example, if my trigger that I got from a source was at 166.51, because that's where resistance is right here, I would go up to the next level to like 166.75, because then that would allow me to think, okay, well, if it did go up to the 65 level, let me see what the high is on this guy. Oh, 166. So would it tag that one as well? And so you can see where I'm going with this. I mean, I'm brainstorming with you while I'm discussing this topic. If you can give it a little bit of room because you're not there to watch it, then that may then solidify the breakout and not a fake out. So take your trigger and add some sense to it. So in this case, if this trigger was, knowing what I know now, right? 166.51. I mean, this went all the way up to 166.70. What is it? 166.68. 166.68. So yeah, if you would just went a little bit more, right? So what is that? Like 50 cents or 50? No, actually, that's about 25 cents. So, and that's for, a $164 stock. So just something to think about. This is not, nothing I ever say is set in stone. This is just an idea that I want you to think about if you're programming your trades and you're not available to watch it. But you're complaining that every time you get into a triggered trade, that it triggers the automation to get you into the trade. And then what's it do? Well, then it goes down and hits your 15% or your 10% stop level. That's what's happening. So one of the ways that you can prevent that from happening is to be there and to recognize that you're not in a hurry to get into the trade and that you're going to evaluate the trigger because you recognize that that is resistance or that is support. And you want to see if those levels hold. And if they don't, you could take the opposite end of that trade. You can actually follow. You can follow your EMAs. And on the flip side of that is follow that trigger as well. But if you get a trigger, it's because it's part of resistance, it's part of support, and utilize it with your basic indicators that you have. You don't need anything special. You can use momentum. If we take a look at momentum as an example here, if this was that trigger, you can see that, right when that triggers, what's it do? 5-10 minutes later, it crosses over and goes completely down. So, at this point, as you're looking at it, would you be saying to yourself at this point, oh, I think it's going to go back up? It's going to go back up and hit this? Not if your momentum is below that zero line, right? So just something to take in consideration. Always make sure that you have a momentum type of indicator. Another good one, by the way, is, this right here. I like to look at the squeeze, but let's just take that off as we're discussing that. Let me take that off real quick. And let me just use a standard momentum indicator. And I think that would just really just be a regular histogram without the squeeze. So let me get that on there just so that I can help you with the visualization. There. And what I do, because I don't have my 20 screens up here, I'm going to take one of those off, and I'm just going to move that up and take off the squeeze. And I do like my, what was that? That was the, not TTM, MACD, I'm sorry. 2 lines MACD, let me get that up there. That's one of my favorites. But I do like to put it in one line here. It's so subjective, right? All of our tools, what we like, what we don't like. So if you're just using a regular histogram, which I think is nice if you're not into the squeeze, and you're just using a regular histogram to identify momentum. So what we do here then is we're looking at, okay, this is the breakout, and it's a nice bright green candle. That's a good sign. But the next one that you get is a darker green, which means that the momentum is waning. And so you get a green one, and it's lower than the previous one. Another green one that's lower, and you can see this candle's red. You see how this is going here? But the problem is that when we identify a trigger that we get from a trusted source, we're just so focused on that trigger and that price level, right? That's all we care about. We're not, even though the tools are on our screen, we're not really taking those tools in for what they should be used for, right? Because our mind is preoccupied with that trigger price, and we better hurry up and get in. But if you just took a couple minutes, like 5 or 10 minutes, you could easily see that it hit its resistance and it's coming back down, and you could have took a play for the down end for that, right? You didn't have, did you have to get to the trigger, which probably would have been down here somewhere? Probably not. You could have took it on the flip side. So just a, quick piece of information in regards to that. I'm going to give you, by the way, I'm giving you some really good momentum tools if you've never really used momentum in your trading. Momentum is very, very important. So I'm going to take off the histogram, and then I'm going to put on the CCI, which is really good. I like this, by the way, just the regular. This is called the MACD histogram. Very simple and easy to understand, right? So this is the MACD 2 lines. I just put them all in the same box because I can identify them. But just the histogram itself, green, really bright green is really positive. And if it starts to turn the dark green, it's waning. It's waning, and then, your down end is coming over here. So just something to consider. And then, of course, your MACD 2 lines, which is right here, identifiable. As soon as they cross, you're going to have a stent, right? You're going to have a stent of a downtrend. So if you were up here with profit, somewhere around here, might be a good idea just to take your profit and wait until the MACD crosses to get back in. Why wouldn't you? Because VIX is over 20, and so you want to really take your profit when you can. I'm just letting you know. So, word of advice. So let me get another momentum indicator, and these are probably the most popular indicators back since the 70s, and I don't think they've changed all that much. They're still the most very popular indicators. So let me go ahead and take off these two. And then now I'm going to put on here the CCI. So the CCI is good. Really good indicator, actually. All right, I got the CCI. So what does the CCI mean? Well, pretty simple. So these lines basically are letting you know the power of the market. And if we're down here, then it's negative, as you can see, right? It's really not like rocket science here. And then as soon as we break, okay, the middle line, which I call the zero, right? You can see it's zero right here. As soon as you break the zero line, that then tells you that the momentum is changing and it's going higher. And then you can see, right, you can almost use this as an indicator of, well, are we too high now? Now that we're heading back lower? Do you want to wait, for that? Your call. But this is another momentum indicator, just like the RSI is, right? Anything over 50, 55, that's positive momentum in the higher direction. Anything below, 50 to 40, now you're getting into the lower perimeter of momentum. What does that mean? Well, price is going down. I mean, it's just as simple as that. And then with the VIX being over 20, you just don't know how fast down that market's going to be going. And so that's just something to take in consideration. Certainly hope this just kind of, put some of the pieces together, because I know trading, and there's a lot of information out there, just trying to kind of piece some of the information that you're getting and helping you to make it as simple as possible. We'll see you in the next video. Hi, this is Sandra with Trading Made Simple, and I hope you liked today's video. My email address is in the description below. Email me if you have any questions on option strategies or training, ThinkorSwim tools, or automation. We'll get you up and running in no time at all. Have a great day, and we'll see you on the next video.